Hey, good morning, everybody. Welcome out to this morning's Saturday morning online workshop with Tax Sales Support. I'm Ferre. I'm here with Stephen Swenson, and these are webinars we do every month or two for anybody that would like to attend.
Yeah, and we have all kinds of different people. Some investors are just getting started, or maybe this is the first thing they've heard about tax lien and deed investors, and we have other people that have, essentially attended some of these over and over again. And so we definitely want to welcome y'all out. If you have questions, you can go ahead and ask in the question and chat section. We'll try to get to as many of the questions as we can. If we can't get to all of them, you can go ahead and email us or email the website after, and we can address some of those.
Yeah, we were out of town for a couple days, and so we actually just got back last night. We've been trying to play catch up here with new signups and all the different fires that get started here when you leave for a little bit. So we've been taking care of that. If there's anybody here that just recently signed up, we've got all the new signups and everything out this morning. And one thing I think that's interesting and worth noting is I'm sure that a lot of the people that have attended or that are on the webinar right now, maybe they've attended other events that we've put on, or they've at least watched other videos that we've put on. I know that all the members that tend to join us seem to have a lot of things in common. I think that for a lot of the people that are on these calls, they're people that have tried training with other companies before. They probably spent a lot of money on it. Most of the people that we tend to attract, they're looking to make some money with real estate, starting off with a fairly small amount, and they see tax sales as a good way to do that. So it's a very like-minded group of people that we tend to attract, and it's nice on the training side of it because the people are also similar.
Yeah, I think Shade's right about that. We tend to have people that may have worked with other programs before, maybe have spent money on training before, and for whatever reason don't quite want to give up on the strategy because they still believe in the strategy. They still just don't understand really how to do it, because it can be complicated, especially when you're looking at 50 different states, 3 different systems, 3 different methods of sales. And we'll go through all of those basics today. That's what we want to do today is, I think last month we went over online auctions or over the counter, and then the month before that we did over the counter or vice versa. And this month we just kind of wanted to go over the basics so that people that are brand new or just getting started with tax lien and deed investing understand what it really took us almost a decade to understand. Between 1999, 2000 to 2010 or so, kind of in that period of what are tax liens, deeds, redemption deeds, what separate them, what are some of the different bidding, the ways that you buy, just kind of that basic information of what makes tax sale investing such a great investment.
Yeah, I think it's true. Everybody here has a leg up on us, and from when we started. I mean, it took us much longer, I think, to figure this out than it will take most of you. When we were starting off, it was a different time with it, and it was right around the time that the internet was starting to have an impact on tax sales. Like Steve mentioned, we started, I think Steve attended his first tax sale in 1999 as a result of getting invited by a real estate broker that he was working with at the time. And really, ever since then, we were very interested in it. We basically sat out to learn everything we could about it, and realized there just wasn't a lot of stuff out there. And so, at the same time, at a certain point, we realized we weren't going to be able to get the knowledge we needed from books or from programs, and we just started attending auctions. And that was where we really started to understand how the process worked.
Yeah. I mean, by actually attending auctions, going out and researching properties before the auction, doing the comparative market analysis, determining what the value is, and then also with tax lien investing, attending different types of tax lien sales, like up in Wyoming, and getting to experience what that type of auction is like versus maybe an online Florida auction, and just seeing the different type of tax lien certificates and investments that are available. So, over that period, we essentially started a company back in 2007, where that company worked primarily with, the largest seminar company. So what we did is we provided the programs and the trainings for the seminar companies, or kind of the behind the scenes guys for the tax sale investment side of the training companies. And we did that really for, 10, 12 years.
Yeah. And eventually we split away from that. And one of the big reasons we did that was because we didn't agree with the pricing and how things were priced out and what people were being charged for. And we knew we could provide the training directly to people a lot cheaper. And, that was a big reason why we kind of split out on our own. And we're glad we did it, because now we can provide training to people for a lot lower price. And we're also not controlled by anything, in terms of a seminar company. And so really this has worked out the best way. And I think it allows us to do what we enjoy doing the best, which is teaching it, showing people how to do it. We've actually got a really good question here, to start off. And we can address the question, then we can jump back into the webinar, because it kind of jumps around some things here. But it's a really good question, so I'd rather answer right now anyway, from Patrick. He says, good morning. Is it possible to buy a property through the tax deed sale and not clear title through a quiet title, but rather just turn around and sell it to the next owner, let the next owner clean the title however and whenever they want? And that's actually a great question. Yeah, it's absolutely possible. That's what we call wholesaling a property. When you buy a tax deed as it is, and you want to sell it as it is, you're basically going to transfer title through the equivalent of a quitclaim deed. And when you do that, you're transferring over still full ownership rights to them, and you're going to sell it probably at a discount to them, because you're selling it as a quitclaim deed. But they have the option then to take the property through quiet title. You don't have to take a property through quiet title. I think it's a misunderstanding that some people are told they have to get a warranty deed on every tax deed in order to sell it, and it's just not the case. You can get a warranty deed on a tax deed and sell it for full market value if you want, but you don't have to do that. You can wholesale properties too, just through a quitclaim deed, and that works out just fine. In fact, we do that. A lot of properties that's going to make the most sense with, just to do a wholesale transaction rather than trying to get quiet title on the property before you sell it.
Yeah, essentially, what we're doing is we're just giving our interest in the property. We're selling our interest to them. So the county, vested interest into us, and we're selling the interest that the county gave to us as is, essentially, to them. There's also different ways where if you can actually, without going through quiet title, you can get title insurance. So if somebody needed to get a loan on a property, for example, and you bought a house, you have an owner who wants to buy it, you're going to give it to them for a slight discount, but you want to get as much money for it as possible, and the person needs to get financing. Well, then you can look at something like some of the title services.
Oh yeah, like tax title services,
yeah,
and
exactly.
some of the other services like that, which they're basically they are title insurance companies that are willing to offer title insurance on certain tax deeds after they have the chance to review them. So basically, they charge a premium to do it, but it is an alternative to going through a quiet title.
Yes, and it's a couple of grand, but it may make sense. Let's say you're buying a house. You bought a house at the tax sale. You're trying to sell it for 80 grand. And
like immediately after.
Yeah, and the owner, you have a buyer who wants to buy it, needs to get financing, can't do it with the tax deed. Well, you can spend a couple of grand to get this type of service done, where they essentially go back and they research the title, make sure that everything's good, and then they'll issue title insurance against it. That's kind of the thing, is that title insurance can be issued against a tax deed. Well, we're kind of getting into a lot of different stuff.
Well, I'll tell you what, let's talk about tax liens and deeds here for a minute, and we'll see if we can continue to address any questions as they come in here. I'm sure that for a lot of you, you're already sold on tax liens and tax deeds, or you already believe in tax liens and deeds, which is why you're here. You've probably been looking into them for a while. If you're new at all to tax liens and deeds, really, I think, why would we invest in tax liens and deeds? Well, really, if you're talking about just a general investment, tax liens offer one of the safest investments you can get with a good high interest rate return. And if you're looking for property, I think that tax deeds are the absolute cheapest way that you can acquire real estate.
Yeah, and there's always new inventory coming up. That's one of the great thing about tax sale investing is that, every year there's going to be new auctions. Every single month in some areas there's going to be new auctions. So there's always new opportunities, and there's always new inventory coming in. And so, it's not like the supply is running out. There's constantly people that aren't paying their property taxes, and eventually, for whatever reason, these properties will either go to a tax lien or deed sale. So there's always going to be new opportunities, new investments coming up, and so it's really a never ending. I mean, we've been involved with it for over 20 years now, and we're always impressed by the new inventory that comes on the market.
In fact, what we're seeing really is the entire market evolve, and we're seeing counties that are getting better and better at offering their properties, finding better ways to sell them, finding ways to reach out to more people, which ultimately means them getting different parts of their sale online and making them accessible to a larger portion of the public. So, yeah, I think that that's absolutely true. The inventory that we've seen starting out 10 or 20 years ago, it's even better today than it was then, because counties are getting better and better at drawing more people into their sales or making them available to more people.
Yeah.
The number of opportunities is growing. It's growing and I think that it's because counties are beginning to see this wonderful income opportunity they have with their tax sales. Also, it's far from I've heard it compared before, tax sale investing compared to some type of vulture investment, something where you're kind of going in and you're cleaning people out. But really, it's just the opposite of that. The tax sale system has to have investors in order for it to work, and the whole point of this system is for people to keep their property. But if at the same time, though, it also still has to have some type of enforcement system in place, or nobody would pay their property taxes. But really, the investor plays an important role in helping counties continue to operate.
Yeah, the property tax system is the oldest system of taxation. Even here in the United States, before we had state taxes or sales tax or any of those federal tax, we had property tax. Because property ownership was a bit of a privilege.
Yeah, it was the first form of community, really.
Yeah, and so that's how they would pay their taxes, would be through land ownership. If you own land, you would have to pay a tax for that land, and so it's one of the oldest systems. It's been used for an incredibly long time. I mean, really since the start of this country.
Yeah, it's also an incredibly lenient system if you think about it. Just about everywhere in the United States, it is incredibly lenient. I mean, there are a few states out there where you can lose your property after a year and a half, 2 years or so. But in a lot of states, you can't lose your property for 4 or 5 years.
Yeah.
I mean, you can go for a long time without paying your property taxes without losing a property. So nobody's getting property taken away from them quickly. This is something that drags out and it takes a long time.
Well, and they have payment programs. Usually these are the properties that are slipping through the cracks, either because the property owner doesn't want it anymore, somebody has passed on, something has happened financially.
Some kind of weird circumstance.
Yeah, most of the time these are people that are walking away for the property for whatever reason. And so, when we're talking about, and I guess that's when we talk about the tax deed side of it, because with tax and certificates, those are going to be more common because the person knows that they have a grace period. They know, okay, I'm going to get a tax lien, but I'm not going to get foreclosed on my property for 3 years. So I got 3 years to pay it off. I'm willing to pay the interest, because I need this money now, but when I get my tax return, I'm going to pay it, or whatever it is. you know. So with the tax lien certificate, those are going to be redeeming throughout the entire system, and that'll kind of get us into the three systems.
Yeah. Now, property taxes are pretty well issued and collected the same everywhere in the country. Okay, it pretty well operates the same. You know, they're going to do it based on the assessed value of your property, and it's going to be a set percentage for that year. And the whole idea is for the local community to be able to provide the services that they are supposed to provide. But as we begin to break it down, this is part of the thing that Steve and I were trying to figure out in the beginning was how this all worked between the different states. What we determined after we started digging into different state laws was that there were three systems that were used throughout the United States, and basically every state would use at least one of these systems. A few states would use two of them, but if you understood these three systems, you pretty well understood property tax enforcement everywhere.
Yeah.
You know, it's a tax lien certificate system, tax deed foreclosures, and tax redemption deeds, which are kind of a hybrid between the two. But between these three systems, if you understand how they operate and work, you're not going to go anywhere in the United States where you can't figure out how property taxes work, because they all operate under one of these three systems.
Yeah, exactly.
Now, tax liens are the system, the word, you know, tax lien is probably the most common term that we hear related to property tax enforcement, but it's really just one system. But it's a great system because it's a system that provides good opportunities for everybody involved, and for property owners, you know, tax liens work out incredibly well. It's a way for you to retain your property even though you're late with your property taxes.
Yeah, exactly. You know, what'll happen is the county government will issue a lien against the property for non-payment of taxes, and essentially give that lien or offer that lien to investors that are willing to pay off the delinquent taxes, the penalties, you know, any fees, and essentially buy that tax lien certificate. Now, by buying that tax lien certificate, the investor is promised an interest rate return. The homeowner or property owner is given a grace period. The county is given its money. So essentially, at this point, everyone's winning because the homeowner has extra time, the investor's making a return, and the county gets its money. And so that's kind of the whole reason why tax liens essentially work.
Well, and keep in mind that 95% plus of tax liens redeem. It's what they're made to do. They're supposed to redeem. In fact, a tax lien not redeeming is what's abnormal. It's far more normal for tax liens to redeem. And how do tax liens redeem? Well, they redeem when somebody pays off their delinquent taxes, penalties, and fees. You know, the lien is issued against the property when somebody fails to pay. When they do pay, that lien is basically removed from the property, and every tax lien is sold with a redemption period, which is the grace period that the property owner has. That's the time period where they can pay it back. It's once the redemption period expires that the lien can begin to be used to foreclose on a property.
Yeah, exactly. And that's what makes tax lien certificates, whenever you hear the term, you know, getting properties for pennies on the dollar, that's kind of what they're alluding to, is the fact that you have this foreclosure right. So if the property owner doesn't pay you back within that redemption period, then essentially you can take the property through foreclosure. Either the county will help you do that, or you'll do that through the help of an attorney, and essentially foreclose on the property. And if the property owner fails to pay you back, essentially pay the county back, which in turn pays you, you're going to be able to get the property free and clear. So, you know, instead of going through a deed sale, and we'll talk about in a minute, the county just gives you the property.
Yeah, now tax liens are generally issued every year. Okay, so a lien is normally going to be issued for 1 year's worth of taxes. And you know, if we're looking at different liens here, what we're looking for is for a lien that has a good lien to value ratio, or a very low lien to value ratio, meaning that the lien amount should be a very small percentage of what the property's estimated value is. The lower that percentage is, the safer the investment is overall. So we can see on some of these, we've got a $379 tax lien on a $55,000 property, and that tax lien pays out an annual interest rate of 14%. So as an investor buying that lien, well, it's only going to cost you $379. You are backed up, or your investment is secured by $55,000 worth of real estate, and it's going to pay out 14% annually, which is going to come out to a little more than 1% a month, 1 point something percent per month. The same with some of these other properties.
Yeah.
The investment's very well secured. You can see by the amount, the lien amount is just a tiny fraction of what the actual property value is.
Yeah, I mean, these are all tax liens that essentially were available over the counter. So essentially they were offered to sell, they didn't get picked up, and investors could go and pick these up directly from the county and essentially start earning a great interest rate return on properties of value. I mean, that's really kind of the key, is the real estate is acting as collateral for the loan.
Yeah, so if the redemption period expires on any of these liens, the question you have to ask yourself whenever you're buying a tax lien is whether the property that the lien has been placed against is going to be worth foreclosing on or not. And with each one of these properties, you can look at it and say, okay, well, I've only got $1,000, into this property that's worth $70,000 or $66,000 or whatever that amount is. It's going to be well worth the cost of foreclosing on any of these properties if they, for some reason, don't redeem. But again, 95% of them do redeem. And that's because people don't want to lose their property due to delinquent property taxes. And being late on your property taxes is not abnormal. Lots of people are late with property taxes. And so really what you're looking for is just the best, I guess, you want your money to be secured and you want to earn a good interest rate return. And if that 14% is acceptable to you, then you're just looking for a good property, to purchase a lien against.
Yeah, and it can be any different type of property. We don't get, we're not picky when we're talking about tax and certificates, as long as we have good value versus kind of the cost of the lien. If the property has value and use, then it's going to be a good tax and certificate, because like Shade said, 95% of them redeem. Yeah.
I was also going to say, there's something else that's just worth noting for people about tax liens, is that with tax liens, the due diligence required to buy tax liens is often very low. It's not nearly as high as it is with tax deeds, because you're not buying the property. You're not making that kind of a commitment. You're just buying a lien against the property. So oftentimes we can make a decision to buy a tax lien within the first 30 seconds or the first minute of looking at a potential investment. It doesn't require a ton of it doesn't require the same kind of due diligence that buying property does.
Yeah, because at that point we don't necessarily have any ownership of the property, anything like that. Now, essentially on the day of sale, three things are going to happen. First, they're going to issue a tax lien at the property. So if an investor buys the tax lien, then they'll issue it. If nobody buys the tax lien, then it's going to be issued to the county. The second thing is the tax lien begins accruing interest, and the third thing is the redemption period begins. So on the day of the sale, a bunch of different things are going to happen. The tax lien's issued, it's going to start earning that interest rate, and then that redemption period begins.
Yeah, after the lien has been purchased, really, there's only going to be one of two scenarios, okay? It's either going to result in redemption or foreclosure, okay? And what it all depends on is what the property owner does and whether or not they pay the county off what they owe in taxes and fees. If they pay the county off, it's very simple. The lien is removed from the property, and it basically redeems, which means that the investor gets a check in the mail for their initial investment plus the interest that they earned. The second option is if the redemption period expires and the property owner hasn't paid, then the lien can be used to foreclose on the property, in which the lien holder will become the new property owner. So really, you're either going to end up with a lien that redeems, where you get a check in the mail, or you're going to end up taking the property through foreclosure. But it'll be one of those two scenarios. So the most common scenario is that the property owner pays off what they owe in taxes and fees. And when that happens, the county basically just cuts a check to you as the investor for your initial investment plus the amount of interest that you've accrued up to that point.
Yeah, in 99% of the scenarios, the property owner is not going to be paying you directly. They're going to be paying the county, which in turn the county pays you.
Yeah. So basically, really what this is about the county trying to continue to operate, the county trying to find a way to collect that money right away. They need a way to collect money fast when it's delinquent. And
essentially, we're loaning the county the money.
Yeah, that's basically what the tax sale investor is doing. Here's another good question here from Patrick. In Florida, if a tax lien investor doesn't get repaid within 2 years and the investor files for a tax lien foreclosure, but no other investors bid, then you say that I would get the property. And if that's true, then how is it that some counties take the property into their lands available for taxes? I'm sure, no, actually, you're not confusing anything. It is confusing in general, just trying to understand how some of it works. So Florida's a little bit unique in that they use, basically, they kind of use two systems. They use a tax lien system and a tax deed system, but their tax liens have a 2-year redemption period. So normally when you buy a tax lien in Florida, you can expect it to redeem within 2 years. But if it doesn't, foreclosing on it is something that's relatively simple to do because it's actually something that the county will handle once the lien holder lets them know that we want to initiate that foreclosure process.
Yeah, and when the property goes to the list of lands, that's essentially these are going to be properties that are generally going to be, over water, where they've got more tax liens or the delinquent taxes is almost what the property value is, and they're usually going to be foreclosed on by the county. So if it kind of depends. What your question comes down to is as far as the list of lands is who gets that property. If the person that foreclosed on the property didn't pay off all the delinquent taxes, then essentially it would go on the list of lands. But if they were the one that foreclosed on the property with the county, but also paid off all of the other liens, then essentially that property would be awarded to them. And so that's where you'll see it, awarded to the certificate holder, awarded to this. If you're looking through the past sales of the results, it's the ones that get to the list of lands are going to be the ones that are foreclosed on by the county, or the person that who did the lien didn't pay all of the property taxes or didn't buy all the liens.
Yeah, what makes Florida a little bit unique is normally if you are the lien holder and you go, if it goes past the redemption period, you're the lien holder, then normally you can just start the foreclosure process and foreclose on the property. But in Florida, what happens is you notify the county about that you want to begin foreclosing, and what they do is they schedule the property for a tax sale, and they're going to sell it as a tax deed property at the auction. And what will happen is if they get bidders on that property, they'll use the proceeds from those bidders to pay off the lien holder. So in a way, your lien would suddenly redeem, because it was purchased by somebody at the auction. The only scenario really where you end up getting the property as the lien holder in Florida is if it goes to auction and doesn't get a bid. If it doesn't get a bid, then you'll see sometimes on the Florida lists where it will say awarded to certificate holder. And that's where the certificate holder basically gets the opportunity to foreclose and take the property at that point if it doesn't get an initial bid.
Yeah.
But normally though,
yeah, if your property's going to list for lands, you didn't purchase the right tax and certificate.
Yeah, because most of the time they are generally somewhat toxic liens a lot of times, where there's just more money owed on them than
yeah, I mean, most of them are going to at least be somewhat over water.
Let's see. Now here's another good question here. This is from Sid. Sid's in Texas, and what Sid's wondering is, do we get the 25% return on the initial bid amount or the final auction amount in Texas? So the 25% that you earn in Texas is a little bit different with it being a redemption deed state. They're basically selling tax deeds that have a short redemption period attached to them. So what you'll earn the 25% on will be on your purchase price of the property, and not necessarily on the initial bid. It should be on the full purchase price of the property.
So if the opening bid was $10,000 and it sold for $20,000, you'd be making your 25% off the $20,000.
Yeah, because otherwise that would really kill your percentage. The other thing about Texas is that it's a flat penalty rate. So that flat 25% is basically something that doesn't accrue with time. If the property redeems, it's a flat 25% right away on that. And The reason for that, really, I mean, they want to make it appealing to investors because, after all, for the investor, it's a lot of money to fork out $10,000 on a property that may end up redeeming anyway. And so if it does redeem, they want to make sure that you're rewarded for that, and you're paid out an additional, a flat 25% on your money if that happens. In most cases in Texas, you've got a 6-month redemption period. But on the homestead properties, you've got a 2-year redemption period. So you have, the potential to earn even more than that 25%, depending on how long that goes. But yeah, that's a really good question there, Sid. Lots of really good questions here. If we take the tax lien, here's another question here. If we take the tax lien on any property, if that property has a mortgage due, do we need to pay the mortgage due as we hold the title after the auction? I'm just trying to see what our liability is once we become lien holders on the property. It's a really good question, and fortunately, the answer is no. You don't have to worry about anything related to the mortgage on a property. You don't have to worry about that at all.
Tax liens are first position lien.
Yeah. In fact, the tax lien, when a tax lien is used to foreclose on a property, it goes through what's called a judicial foreclosure. That's a foreclosure that's done through the courts, and it's with a tax lien being a first position lien, what it means is that they take priority or precedence even over something like a mortgage. So let's say that you buy a lien against a property and somebody else has, the property owner has a mortgage on it. Well, most likely what's going to happen is at some point in time, the property owner is going to come up with the money to pay it off. But if, for whatever reason, if they didn't, the property could be foreclosed on. And if the property was foreclosed on, what that would mean is the foreclosure notices would go out to anybody that has a financial interest in the property. That would include the mortgage company if they're, if the property has a mortgage. Well, any party that receives that mortgage, that receives the foreclosure notice has an obligation to step forward and to try to pay off that amount to avoid foreclosure, because if they don't, they lose any claim they have to that property, and that includes the mortgage company. So you don't have to worry about mortgages at all. In fact, even with tax deed properties, you don't have to worry about mortgages, because if there was a mortgage, if it did exist against the property before and the property is foreclosed on, it no longer exists against the property. But many times the mortgage companies will pay that off before it happens.
Yeah, in almost every circumstance, that's going to be the case, except for, a state like New Mexico. But
in fact, part of the reason why people like liens is because they're so simple. Banks love liens because they can buy liens and they don't have to do anything with them. They can just sit back and wait to get checks in the mail, because they already know that 95+% of them are going to redeem. So the good news is, once you buy a good tax lien, you don't have to do anything on that lien. In fact, the only thing you may do is you may get the opportunity from the county to buy subsequent liens. If you buy a first-year lien, they may contact you if you want to buy the second-year lien on a property, which sometimes it's a great idea, because one of the requirements in order to foreclose on property is that the taxes are current. And if you are the one that's basically paid off all the back taxes, then you've already you've already paid the amount to foreclose on the property.
yeah, essentially, I think the biggest risk with taxing certificates is going to be what we call the roll-up, and that's just the additional years of taxes or, delinquent tax liens on the property. And so, when we're looking, because to foreclose on the property, we're going to have to pay off any of the delinquent taxes on the property. So as we're looking through taxing certificates, if everything looks good, like Shade said, we're willing to go ahead and buy that taxing certificate fairly quickly without a ton of research. Just because we're able to see the value there, we can verify the value. We see how much the total delinquent taxes are on it. And it's really pretty a simple investment once you understand what you're looking for.
Yeah, Patrick had another really good question. He said, so what is the best way you guys have found to purchase real estate for 10 cents on the dollar? And really, it kind of leads us right into tax deeds and some of the other methods that we utilize are some of the best ways out there to acquire property. Tax deeds are used in about maybe a third to maybe a little bit more than that of the states around the country. And the idea is really pretty simple. Rather than issuing annual liens against the property and selling those off, what the county does is they just wait out a redemption period. So that redemption period might be 2 years, it might be 3 years, whatever the amount is, the county waits out the redemption period, and at the end of the redemption period, the county will pursue foreclosure on the property. If the property is foreclosed on, then the county will sell those properties that are foreclosed on at a tax sale to the highest bidder and use that to recover the taxes that are owed to them. So if we're talking about the best way, what's the best way that we found to acquire property for 10 cents on the dollar? It's going to be a combination of buying methods related to tax deeds, are probably going to be some of the best. We love to find properties for really good deals. And so what we'll look at here are some of the different buying methods related to how you can purchase tax liens and tax deeds, because that's where we found some of the best ways to pick up property for 10 cents on the dollar. So for instance, like we've dealt with some auctions where we've been able to do that pretty well. We've dealt a lot of over-the-counter lists we've been able to do that well with.
Yeah, when it comes to tax deeds, essentially, depending on the market and the property, we're looking to get properties anywhere between 10 to 50 cents on the dollar. So in some markets, 50 cents on the dollar would be more than we'd ever want to pay. But in a market like, let's say we're looking in Miami, and this is a great area or something like that.
California.
Yeah, California. We're willing to pay up to 50 cents on the dollar for properties in certain markets because you can't find any property for 50 cents on the dollar in that market. In other markets or in other strategies, we buy properties for 5 cents on the dollar.
Yeah.
Sometimes even less than that. For a couple $100, kind of depending on the area and the market. And so every property is going to be a little bit different. But the key with tax deed investing is that we're getting the property for cheaper, or for cheaper than any other strategy we could within that market.
Yeah, we're definitely buying. We're paying the absolute lowest price that anybody can possibly pay for the property. Something else that's a little bit different about us is a lot of investors are only looking at properties with improvements. They're looking for the homes and something that people can live in. But we tend to focus more on raw land because the raw land is easier to buy for out-of-state investors. You can buy raw land sight unseen based on things like satellite images and street side views. But when it comes to a property like a home, if you're going to buy that and it's in another state, you have to have somebody there to take images of the property, tell you exactly what the condition of the property is. There's a lot more involved with the due diligence process when you're buying stuff out of state. So we tend to focus on a lot of raw land because those are some of the best opportunities that we find, and that's also a good way to be able to get property for 10 cents on the dollar.
Yeah, well, people, if we're looking at a list and let's say there's 10 good homes on that list, everyone's going to be focusing on those 10 good homes. Well, there may be just as valuable as real estate in a commercial land piece or in residential land that's going to be completely overlooked. And with something like land, like Shay talked about land, we're not worrying about some of the things that we're going to worry about with a structured or home property, like termites or getting a new roof or mold or any of those different types of things that are going to come up with structured property. So especially when first getting started, we think that's a great thing to do. In fact, there's also huge amounts of profit that can be had in land. One of our coaching students just picked up 27 acres in New York and, was able to, the property has a value of anywhere between $300,000 to $1 million, depending on how it's sold and developed.
Yeah, and they probably paid about 10% on it or less. Really, they
paid about 10 cents on the dollar.
They picked it up for about $30,000, and it will have a ton of profitability on it. There's something else that we also do is we also focus on properties that are really cheap. In fact, a lot of the first properties that we help people buy will cost less than $1,000, less than $500. In fact, we love properties that we can pay very little for because the less you pay, basically it minimizes your risk It makes it easier on your pocketbook. I mean, everything about paying less for properties is beneficial. And so we love to find properties that we can pay less for, properties that we can pick up for a fraction of what they're worth. These are a couple of examples of the types of properties that we like to target and properties we've purchased here in the past. So this property on the left, you've got, I think this cost us $500. It's about 0.41 acres, but it has an assessed value of about $25,000. We love properties like this because it's in a developed neighborhood where there are a limited number of open lots still available. It has a definite use and value there, and we can, it's easy to determine the value of the property because you've got all these other homes there that are in the area, and it's also highly desirable because it's one of the few that are left.
Yeah, well, and a $500 property like this, there's not a huge amount of risk. If we're spending $500, $1,000 to get the first couple of deals, and just like we said, is the value goes up or as the expense goes up, then you can purchase a deal like a $30,000 deal and make $100 grand or $200 grand on the deal. So the possibility is the limit. But starting out, there's very little risk. You're not risking a huge amount of money, on that property. In worst case scenario, you could probably sell it for $500 or $1,000. Probably even double or triple your money in a worst case scenario because you're buying it for so cheap.
Yeah, in fact, yeah, another good question here that Patrick has is over-the-counter deeds and land available for taxes the same thing? And the answer to that is yes, that is the same thing. In fact, part of the challenge when you're investing in many different counties and states is trying to understand the terminology, that is used for different things. And what you'll find is a lot of times different counties use different terms to describe the same things. So their over-the-counter deeds are also their lands available in many cases. And what we're talking about are different properties that are offered at an auction but that don't sell. We've had a lot of success with over-the-counter lists in the past because they're properties that are just sitting there that have already been offered at an auction, and oftentimes you can buy it at deeply discounted prices. So they're easily overlooked. You have to do a little bit more sifting because you're going to be dealing with more junk properties as well. But in there, you're going to find some great properties all the time that in that list, properties that have good use and value that just didn't get picked up at the initial sale.
Yeah, when it comes to what they're called, like lands available for taxes, that's a Florida term. And so, there's going to be a lot of different terms out there, forfeited land. But essentially, it's usually going to be done on a state level. So in our state guides, within our program, we essentially will say what's usually the terminology within that. Is it lands available for taxes? Is it
repository properties like in
list.
Pennsylvania?
So it's going to depend on the state, but essentially what we're looking for is properties that were initially offered for sale or that are coming up for sale that they're going to be a tax deed foreclosure. So the foreclosure has already taken place. And then, in addition to that, there'll be some that get offered over the counter.
Yeah. Now, tax deeds, again, this is a really common system. And one thing that's also, I think, very promising for deed investors is that we're seeing more and more states, even states that don't use tax deeds as a system, that are beginning to offer tax deeds. In other words, we're seeing a lot of tax lien states that are beginning to offer things like land banks. They're basically their way of offering their lands available or their over-the-counter properties. We're seeing more and more states and counties that realize, that they need to foreclose on certain properties and sell the properties off in order to, to get new owners into those properties that are paying the property taxes. So it's a growing number of opportunities we see there with the tax deeds. In fact, we're finding more and more tax deed opportunities all the time.
Yeah, well, Arizona is a great state, and we've seen this in Colorado and a number of different states where Oklahoma does it, where essentially, they will foreclose on all of the county-held tax liens. And so, the county may have, hundreds of different tax liens. And so what they'll do is they'll foreclose on a lot of the best properties and offer them up at a deed sale as well. And so some of these deed sales will start at $500, $1,000, but essentially you're able to pick it up for usually about 10 cents on the dollar is usually kind of that opening bid price is usually going to be around that.
Yeah, we've also found lately, we found hundreds of land banks available. And the land banks, a land bank is a nonprofit organization that's established by the county to help them sell their lands available, or their, the county held lands. And so what we're seeing with many of these are they'll set up websites where they will sell some of these properties. And the advantage is that in many cases, they're going to get a lot of images of the properties for you, and more information about the properties, and we'll list it on the site in an easier format to be able to take it in and understand what it is. We're seeing hundreds of those land bank websites popping up all over. So I think we're going to see an increase in the number of opportunities that are out there for tax deed investors.
Now, what are redemption deeds? And this is actually something that me and Shade were trying to determine, 15 or 20 years ago, because there were these states that weren't quite tax lien states, like, Arizona or Colorado or Florida. They weren't tax deed states like Utah or California, but they were more of a hybrid of both. And so really what we started calling them about 15, 20 years ago was redemption deeds, because that's essentially what it was. And Texas is kind of the perfect example of the redemption deed state, where essentially they're selling a tax deed, but they're still attaching a redemption period similar to a tax lien certificate. So with a redemption deed, you may actually have some ownership rights. You may already actually be issued the tax deed. But that tax deed isn't going to be essentially not transferred, but when the county issues it.
They record it?
Yeah, record it. It's not going to be recorded until after that redemption period has passed.
Yeah, it is kind of a weird hybrid of the two systems, and it offers benefits and drawbacks just like anything else. For instance, you really have to go into it and approach it like you are buying property. So you have to research it just like you would to go and buy any tax deed. And there's also going to be more money forked out because you're basically buying a property, but it has this chance to redeem. The one benefit of it, if it does redeem, they pay out a flat penalty rate, which is just going to be a flat percentage rather than something that accrues with time. So with redemption deed states, really, we've got some of the best of both worlds there. Most redemption periods in redemption deed states are not that long. The majority of land in Texas is 6 months. It's only 2 years for the homestead properties. And in a lot of other places, they've got short redemption periods like that. And really what it is, it's kind of like it's giving the property owner one last opportunity to get the property back before they lose it forever to delinquent property taxes. But something else to consider is this. If a property owner has already allowed the property to be late enough that it goes to the tax sale, then they're already struggling to pay off the amount that's owed. And once it goes to the tax sale, the amount that they have to pay goes up, it increases dramatically, because not only do they have to pay off what they owe in taxes and fees, but the fees increase because the property was just sold at the auction, and they're going to have to basically pay increased penalties in order to get it back. So it only gets harder the longer the property owner allows it to go.
Yeah, and the two biggest states for redemption deeds are essentially going to be Texas and Georgia. And one thing that's unique about these two states is they can have auctions every single month. So, some of the more less populated counties may not have auctions every single month, but the larger counties will. So every single month there'll be new opportunities essentially coming up for auction. And then also in the case of Texas, you're going to have property ownership rights. So, after that auction, you could actually live in the property, you could rent out the property, you could do basic maintenance on the property. You're just not going to want to put a ton of money into it because of besides just basic maintenance and repair, the property owner doesn't have to pay any. So if you put on a new deck or an addition or anything like that, they can still redeem the property. But like Shade said, you're going to be researching it like it's a tax deed because you're going to have a higher chance of getting the property. These are some different properties that are essentially coming up for auction in one of the Texas auctions. You can see the opening bid amount, the assessed value versus the Zillow. Kind of gives you an idea of some of the different properties and the opening bid. So, you know, this starting at $4,900, it may not sell for $4,900. It may bid up to $10,000 or $12,000. And so the property owner is going to have to pay that 25% off the $12,000, not off the $4,000. So if they, you know, couldn't pay the $4,000, chance of paying the $12,000.
Yeah, if it's sold for $20,000, you know, they basically suddenly have to come up with an additional $5,000,
Yeah.
you know, in order to redeem their property, which is a pretty dramatic increase in the amount of the tax bill. You know, again, if they couldn't do it at the before the sale, they're going to have a tough time doing it after the sale.
The key with redemption deed is research it like you're researching a tax deed because you have a 50-50 chance, if not higher, of owning it.
Yeah. The percentage of redemption deeds end up redeeming is different from tax liens. It's not 95% like it is with tax liens, but you know, it's still going to be a fairly high. 50% is a good number to use, you know, because it does have a much higher chance of redeeming. Now, the buying methods are an important part of understanding this, and it's also where you find some of the best deals. It's in understanding all the different ways that you can potentially buy tax liens and tax deeds, and then utilizing, you know, ones that work best for you. So the three buying methods that we use primarily are going to be live auctions, online auctions, and over the counter, which are pretty self-explanatory. I mean, live auctions are still the most common sales method that's used out there. In fact, there's most likely live tax sale auctions happening in your state.
Yeah, I think every state as of now that we know of still have
live auctions.
Even states that have moved over, you know, a lot to online auctions will still have live auctions. And most of your states, it's going to be the primary method used. And so, you know, the live auction is really one of the best places. I mean, there's advantages to online auctions, there's advantages to live auction, to over the counter, but live auction is the first chance those properties are going to come up onto the market, and you're usually going to only have local competition. So if you go out to if you travel to a different place to attend that auction, you're usually only going to be competing with local competition. So it gives you the best chance to get properties at the very lowest price.
Yeah. In fact, if you have an opportunity to attend live auctions, they're worth attending even if you're not going to buy anything. They're worth attending just because you'll learn a lot by attending these auctions. Now, online auctions were basically something that were brand new when Steve and I started with this. You know, was when we first started seeing a few of the first online auctions, like in Arizona and in Florida. They had some of the first online auctions that we saw. The online auction, the only downside there is that I mean, it's obviously easier for us to participate in, but that also means it's easier for everybody else to participate in as well. So it increases the amount of competition, but it's much easier it's more convenient for most investors.
Yeah, well, if you're trying to invest outside of your own area, then online auctions may be one of the primary strategies that you're going to use. It may, you know, there may be more competition, but the fact is you can participate in any of the auctions without attending the auction in person. So it's going to be less time consuming. And so really you can still get the type of deals. You just may bid on more properties to get the deals that you're looking for.
Yeah. You know, we're also seeing a, you know, growing number of online auctions. That's a number that has continually grown every year.
Yeah.
You know, we're seeing more and more counties and states that are using online auctions, which is great to see. The over-the-counter opportunities are something that we love to go after, especially considering our love for raw land. You know, because when you're going after things like raw land, I mean, sometimes we can still find homes in lots of over-the-counter lists, and sometimes we find great properties in over-the-counter lists because some counties have a difficult time getting enough investors out to their auctions to buy up all of their properties. And so they have huge numbers of over-the-counter properties. Over-the-counter investing is nice in a lot of ways because of the convenience of it, because again, you don't have to travel. You also don't have to pay anything over the taxes owed, you know, and so you're not competing with anybody directly. To buy it, you basically just pick out what's on the list and buy. So there's a huge selection of properties that are out there that you can pick up. It's really, it's a matter of getting good at sifting through the lists to try to find those good properties in the over-the-counter lists, because they're going to be mixed in with properties that are junk.
Yeah, and that's part of the skill of going through over-the-counter list is looking for the properties that have use and value. That's primarily, what me and Shade are looking for. Is we're going through a list, is we're looking for properties with use and value.
Yeah. Now, since we're getting a little bit short here on time, we can just talk about the membership for a moment. So membership to Tax Sale Support offers a couple of different things. Number one is it works as a list service. We've been providing lists for the last 10 or 15 years at least. And what we do is a little bit different when it comes to getting lists. We actually go to the counties and get the lists from them. We don't get the list service from somebody else. We go out there and gather the lists ourselves. And so we're going to have a lot of lists that I don't know if you're going to find in many other places, because most of the places don't do it the way that we do it.
Yeah, well, essentially, we've been getting the list from the counties for 15 years, so we've got a system of knowing exactly who we need to email or exactly where we need to go to get all of these different lists. In fact, we can just kind of give you an example. It's just some of the lists that were essentially available, in the month of August. These are the different states that we had auction lists for. So we had over 438 auction lists available in the month of August on our auction calendar. So you can see all the different states and how many different auctions, 50 plus in Texas, while California just had 5 auctions that were taking place.
Yeah, I mean, really, they're shocking numbers, and the sales that are taking place are all over the country. In fact, we found that there are so many good places to invest around the country. A lot of times we're going to encourage people to look locally first, in their area, but there are tons and tons of sales that are taking place all over the country.
Well, and these are, example, we have 27 different states that we get over-the-counter lists for. So we've got, most of the states any state that offers over-the-counters, we're going to have those available. We also have the list of land banks as well. I think I forgot to copy that one.
That's right. We can actually go and look. We've got there are also IRS and Treasury sales, and the reason why we include these, the one thing that makes tax deed sales such a good opportunity is the fact that the party that's selling the property, the county, they don't have a financial interest in how much the property sells for. As long as they get that initial amount, which, they'll have the opening bid start at what's owed to them. Beyond what's owed to them, it doesn't matter what sells to them. And that's what it takes in order to find really good deals on real estate. If you're trying to buy real estate from somebody that has a financial interest in the property, it's always going to limit what kind of a deal you can get, because they're not going to let go of their profit. Counties don't look at it that way. And they don't look at their tax sale properties that way, and neither does the IRS or the Treasury either. As long as they are collecting what's owed to them, they don't care what the ultimate sales price is, and that's why you can get good opportunities in some of these other places. We could also look at some of the land banks if you want for a second here. As we go to wrap up here, we can kind of show here. So here is Tax Sale Support. Like we said, the first part of this is going to be a list service. So we've got a combination here of the auction calendar and as well as the over-the-counter database, online auction listing. Basically, the list center here, if we were to click on it, there are a lot of different places we could go. We could look at the auction calendar. We could look at the over-the-counter database. If it's the calendar, it's going to show up, and we can look and see individual dates like this. We can look by days of the week. If we wanted to look at something like the over-the-counter database, then we would go here And we would choose, are we looking for over-the-counter tax liens? Are we looking for over-the-counter deeds? Are we looking for redemption deeds? We could also look at land banks is a new section that we've added here. We talked about the addition of all these land banks. Here are a couple hundred land banks that we found here just recently for all sorts of states. And these are direct links to each of these individual land banks, and they're all over the place.
Yeah.
And there's even more of them than what we have listed here. We already know that there's a lot more we can add. So the other side of the membership here in Tax Sales Support is the training and getting support. We do weekly webinars. So every Wednesday night we do a training webinar. We also take questions from people. We can answer questions and hell, we also got materials that are included with that. We've also got coaching students that we work with, and the coaching program has been incredibly successful.
Yeah. I mean, essentially, we can work with investors on every level. You're not going to find a better service, at least I challenge you to find one for $30 a month that's going to provide you with the type of training, the type of lists, the weekly access to the webinars, all of the different training that are available as a monthly member. It gives you the ability to cancel at any time. With using PayPal, you're in control of canceling, so you can cancel if you'd like to. And we offer that 30-day money-back guarantee because essentially we get that, it's only 1 or 2 times a year that somebody will actually request that. And because most people see the value in what we're trying to do and what we provide, you could actually spend hours going through each one of these centers. The member center, the training center, the list center, the profile center has tons of different information from our video library where we have hundreds of hours of training to all of our different guides from the the workshop guide, the quick start for investors guide. There's just a huge amount of training that's going to be available for you. So if you're interested in tax lien and deed investing, definitely we think it's the best resource that you can find.
In fact, one of the things that's different that we do now, it's different from the way we did things even 5 years ago. And some of you may relate to this. We used to focus on a lot of the minute stuff, the theory related to to tax liens and deeds. But what we found with our coaching students and with our members is we actually don't focus on a lot of theory at all anymore. All we basically focus on are just the things you have to do to buy and sell a property, because otherwise it can get confusing. So we focus on the things related to what it takes to locate, evaluate, and buy the properties. And then once you buy the properties, we basically focus on things related to what you have to do to sell the properties. And that is where most of our focus goes now, rather than getting too confused. Because trust us, you could spend your entire life learning about tax sales, and there will still be more stuff to know because because there are so many different states out there and so many different ways that they do things. What is good though is rather than getting caught up in that stuff, the important thing really for you is that you're buying and investing and that you're having success with that. And so we've found, I think, the best way to get to that. Okay, we also have a good question here. Let's see, it looks like Esther had a question here for us. It says that you mentioned during the web that if you buy all the liens of the property, you basically paid all amounts due. Will the property still go for an auction sale if you foreclose on it? The answer to that is no, it shouldn't. In fact, we might have confused you a little bit there by talking about Florida because Florida uses things a little bit differently. But in most cases, in most lien states, if you buy a lien against the property and the redemption period comes to an end. Okay, so let's say you buy a lien that has a 2-year redemption period, and the county contacts you after the first year and offers to sell you the second year of the second tax lien against the property, and you were to buy that as well. Basically, as that redemption period comes to an end, you can use that first lien to initiate and foreclose on that property. It doesn't go through a tax sale at that point because you are basically foreclosing on the property because it went past the redemption period. Now, what we mean by the amount you paid, normally if you wanted to foreclose on that property, before you could actually take possession of the property, the county would say all the taxes have to be current before you can before we can transfer ownership, because that's one of the things liens do. And so you would need to pay out X amount of money in order to foreclose. And what that would actually be would be that other lien that you didn't purchase. You'd end up paying that off basically in that lien holder. But if you're the one that bought both of the liens, then you're basically already the lien holder for both those properties. And that would give you the ability to foreclose on the property and take possession of it. But you wouldn't have to worry about it going to an auction because you would basically just foreclose on the property and make it yours.
Yeah.
Let's see here. Now, if any of you would like to sign up, you can do that here in the under services, under membership here. You can sign up here and we can get you set up and created with an account. If you have questions about anything related to coaching or anything like that, you can contact us directly. You can send an email to Steve or me, Shade at taxsalesupport.com or Steven at taxsalesupport.com.
Yeah, you can also go up to the contact section and send your contact there as well.
Yeah, and we'd be happy to answer any questions you have here. Now here's another good question here. When I look at the list, I see a bunch of numbers. How do I make sense of them? Do you have a specific place in the member area that explains what to do with each of those numbers and how to do due diligence? Yeah, we actually, so the numbers you're looking at are most likely going to be things like partial numbers. And not all the lists are the same, but we do have a lot of different trainings that are out there to kind of show you how to take a list and to take that information to gather and to see what you need to find out in order to make investments.
In fact, I think if we go to the course library, I think we just did a webinar about how to read.
The video library?
Yeah, the video library. Scroll down a bit. You're researching tax sale lists. So on the August 1st, we did an entire webinar on essentially, how to do that.
Yeah, in fact, it goes through, because that can be kind of the confusing part when you're dealing with lists that don't provide a ton of information. They can be a good opportunity, because if it's difficult for you to perform due diligence on the list, it's probably difficult for everybody else, which means that there's probably been less due diligence performed. In general, there's probably been less things purchased. And so, yeah, we do have trainings though that can teach you how to utilize any list and use it to try to gather more information. Oh, awesome! And Patrick, we're happy to have you. I think Patrick joined us here about a week ago, and so that's great. We've actually been gone for most of this week here, so we're glad we could catch you here on this webinar. Yeah, it is good to be back. But we are happy to help you guys with whatever we can. There are a ton of opportunities, and so if you do need help with anything, or if you'd like to sign up, if you have any questions, you can contact us directly. Or you can sign up here on Tax Sale Support for the $29 a month, and you can cancel anytime. There's no obligation there, so it's basically something that you can join and cancel as you've got the funds to be able to do it. We basically wanted to make it affordable and easy, for people to participate in. So.
Yeah.
Well, excellent. Hey, and yes, what would the next step be after becoming a member? The coaching program has been, just to give you some information on the coaching program, we started the coaching program at the beginning of this year. So it's only been operating for about 9 months, and we took a little bit different approach. In the past, we were always private labeling materials and giving them to companies and basically letting them handle things. So this was the first time that we actually took on personal coaching ourselves, and it has been awesome. Basically, we've been able to help so many people buy stuff already.
Yeah, essentially we have our membership. So about 10% of our membership do coaching. So we have members that are able to use the information that's available, use the weekly trainings, and are able to do that to go out there and do deals or get started buying liens or whatever it is that they want to do. Then we have some students that want that additional help, that step-by-step taking them through doing deals. And if we go to I can't remember if they might be in here for the personal coaching. I think if we scroll down, there's some, just different property deals. So here's some different property deals that are essentially our coaching students are doing. if you need that additional help or are afraid to do, you know, tax deed deals, a lot of our coaching students are essentially looking for tax deeds, because, you know, that's property ownership, and that's a lot more risky than just going and doing, buying tax and certificates. And so, you know, this is where they can join our coaching program, or at least sign up. You know, the coaching program is just me and Shade that do it. So we actually kind of are picky and a little bit choosy on who we work with, because we need to make sure we can help them be successful.
Yeah, we definitely want to make sure that that we, you know, we can help you. But our objective, once we take on a coaching student, though, is to basically help them start buying stuff as quickly as possible. And part of the reason for that is some of these different buying methods will take several months before you actually are able to get the deed in your hand. Even over-the-counter deals, sometimes it can take 2 to 3 months. And so part of what we want to help them do is to build up a pipeline of properties here in the beginning, so that they begin receiving deeds here in 2 months, 3 months, constantly receiving deeds. And then as you're receiving deeds, you can start the process of selling. And as you sell, it's a process of selling off properties and constantly replenishing, you know, with new properties that you have coming in. You know, it's really the way to kind of get that buying and selling process going. And so, you know, you're going to want to buy and sell, you know, at least 5 to 20 properties a year, depending on the prices you're paying. You want to get that process started as quickly as you can. But yeah, these are all properties that our members have purchased, and a lot of them have already sold. You know, so the selling on the property, again, when you pay the lowest possible price for a property, it gives you so much freedom when it comes to selling it, because really you can sell it based on price. The price is going to be the major advantage you have over other people. And how quickly you sell things oftentimes just depends on how much profit you want in the deal.
Yeah.
You know, so you know, if you want a lot of profit in it, you can hang on to the property and you can wait out until you find the right buyer. If it's more about the quick sale, you can price it at an amount where you can generally find a buyer within the first 20 to 30 days.
Yeah.
So yeah, there are tons of good opportunities out there. So please let us know if there's anything else that we can do for you guys. We're happy you joined us here today, and yeah, we'll keep an eye out here. If you need anything, contact us either on the contact form or you can send us emails directly.
Yep. Appreciate it. And you guys have a great week, and thank you again for coming out.
Have a great weekend. We'll see you.